Guys, someone will reveal the top 5 crypto coins to invest. Guaranteed to make you rich. I got to run back to the office. Hey, stop. CTO checkpoint.
Okay.
What's your investment strategy? Well, I want to get rich quick, but I don't want to do any work. So I'll just hop on the internet and find someone on YouTube to tell me what to do. Then I get rich. Red card. Guys, what 5 coins to buy based on the YouTube video is already wrong. You will never make it long term with that approach. Big channels with millions of subs or small channels leaking alpha doesn't matter. Teenager or billionaire talking doesn't matter. I'm CTO Larsson, and in this video I will give you 5 of my favorite projects or coins in crypto. But then I'll tell you what I think you should really do, so make sure to watch to the end. It might come as a surprise to you. If you find my content valuable, please do me a favor. Please press the subscribe button and the bell right now, if you haven't already. Otherwise, investing is what and when. I will start with the what first, as promised in the title of this video. Then I'll give you the timings. Let's head back to the office and I'll give you not 5, but 7 of my favorite projects. Let's go. When you pick your top 5 or top 7, you can make 2 different categories. Biggest typically remain the biggest. That is the most likely outcome. If we go back 5 years and look at the biggest coin then, it was Bitcoin, Ethereum, XRP, Litecoin. If we then compare with today, we have Bitcoin, Ethereum, Tether, which is the stable coin, not something you invest in, then Binance Coin, Cardano, XRP, and Dogecoin. If we look 2 years back, we have all those here. Bitcoin, Ethereum, Tether, Binance Coin is here, Cardano is here on number 12, so that's actually outside top 10 then, but if we go back 3 years, it was in the top 10 at position 8. XRP is here. So Dogecoin, which was at position 29 then, is the only new entry at the top 7 that wasn't already in the top 10 during the past 3 or so years. Even 5 years ago the list was similar. So a good bet is that in another 2, 3, 5 years from now, the list will probably still be similar. This is a somewhat shocking conclusion to many when you see how fast everything moves in crypto. In stocks, I analyze charts with Larson lines set on weekly or bi-weekly candles. In crypto, the optimal is daily candles. That's 10 times faster. Crypto is 24/7 trading, software, no hardware, open source culture. All this boils down to an unprecedented pace of change. A boom and bust cycle can happen in days. Still, not much has changed in the power balance between the coins, even in a 3 or 5 year period. My first set of favorite projects will be the biggest ones for 2 reasons. Number 1, they will probably be big tomorrow because they are big today, not necessarily because they are the best, but actually they are the best at one thing each. After this, we'll add some smaller projects that have more room to grow, but also higher risk. Bitcoin first. Bitcoin has the brand. It is the highest credibility. It is Bitcoin that El Salvador introduces as national currency, not Ethereum or Dogecoin. Also, one thing about Bitcoin is misunderstood. Elon Musk writes something here which I profoundly agree with, yet there is one thing that he hasn't understood yet. Block size and frequency should steadily increase to match broadly available bandwidth. It won't need to reach Visa speed, as regulated exchanges will act as de facto second layer. But the perfect should not be the enemy of the good. It is still good to increase base layer transaction speed and lower base layer transaction cost. I profoundly agree with this. As a CTO who have actually built systems that are used by billions of people today, watching the block size debate in 2017 was painful. It was never about what was best. It was about who was the king, who was to decide. It was a childish, kindergarten-level fight. I actually don't understand how someone can argue that parameters that were optimal with respect to bandwidth, storage size, and computing power in 2008, 13 years ago, are still the optimal parameters today when the internet, storage, and computing has increased by 30 times since then. So, I agree with Elon. In some ways, Bitcoin is lagging behind now. But there is one thing he hasn't understood. Finality in blockchain is probabilistic. A blockchain transaction isn't final after the 10-minute block time, after one block. The higher confidence you want that the transaction won't be reversed, the longer you have to wait. And the more mining power there is assigned to the chain, the shorter you need to wait. So even though block time is less on Dogecoin, you still have to wait longer until you have achieved the same confidence that the transaction is actually final as if you use Bitcoin. This site calculates it like this. If the entire Bitcoin hash rate was mined by the most modern miner hardware, I think now it's Antminer S19 Pros, it would require over 2 gigawatts of power. And if, say, all of Dogecoin was mined with the most optimal hardware for that blockchain, it would require 330 megawatt of power. This is relevant because if you plan to attack one of those blockchains, you could buy the newest hardware. If you succeed, you can reverse your $1 million transaction by reorganizing the chain. Maybe you buy your Lambo, you pay with Bitcoin, you drive it out of the parking lot, and then 1 hour later you reverse the transaction by reorganizing the entire Bitcoin blockchain. To 51% attack a proof-of-work chain, you need to get your own mining operation to be bigger than the totality of the rest of the mining. Then it's cheaper to do that after, say, 1 hour on Dogecoin than after 1 hour on Bitcoin, even though the block time on Dogecoin is 1 minute versus 10 minutes for Bitcoin. And it's not as expensive as you might think. Look at Litecoin here. Of course, this might still be easier said than done. You have to get hold of the equipment, find enough electricity to power it, etc. But still, to get the same level of confidence that the transaction won't be reversed, you have to wait 9 times longer with Dogecoin than with Bitcoin today, not 10 times shorter. The best, in my opinion, would still be to do both, but Bitcoin is not as bad as it might appear at first glance. In terms of probabilistic finality, it's still the fastest blockchain by far. Did you know this? If not, you owe me to subscribe, or else I will link my Bitcoin video in the description, the Bitcoin Wrap. The second coin is Ethereum. What I don't like with Bitcoin's proof-of-work solution is the environmental impact, and there is no momentum to change it. I do think that Ethereum moving to proof-of-stake and the 99% reduction in electricity consumption it will bring will turn out important. I'm also optimistic to the layer 2 scaling and the whole DeFi revolution. I think it will go far. Programming complex functionality on the Ethereum world supercomputer is a world revolution, no doubt. And new programming frameworks like Morales is making Web3 more accessible to developers. Coding Web3 dApps becomes increasingly similar, like writing normal Web2 apps. That will further fuel this revolution. I will link 2 Ethereum videos below in the description that are all very much relevant today, including one where I predict 5 price scenarios for the future. The third coin is BNB. BNB is interesting because you get 2 things in the same coin. You can get some sort of exposure to the exchange, Binance, and if we compare the crypto-only exchanges, you see here, this is Binance, this is OKX, this is Huobi, and then the rest are these tiny ones over here. Also look at the absolute figure. This is $1.5 trillion in the peak month of May. If we look at the fiat to crypto, Coinbase is only 200 billion, FTX Spot 75 billion, Kraken 100 billion in May. Crypto to crypto centralized exchanges already dwarfs the fiat to crypto market, and Binance is the undisputed king. This was per month. If we compare the DEX volumes, Binance.com daily volume today is 11.6 billion, while Uniswap as the biggest DEX is 640 million, so Binance is still 18 times bigger than the biggest DEX. Then you also get exposure to Binance Smart Chain. Today that chain definitely has advantages over Ethereum in terms of low cost and faster confirmation. It's not as decentralized, but both are permissionless, meaning you don't have to ask anyone for permission to do stuff on the chain. And as it turns out, many people are fine with that. Daily transactions on Ethereum is about 1 million, daily transactions on BSC today is about 3 million. Will this advantage disappear when Ethereum launches proper L2 support on key applications like Uniswap? I guess so, to some extent. But who knows, maybe the BSC team will take other actions to still stay ahead with their market proposition of being the lower cost alternative. All things considered, BNB provides a lot of exposure into crypto. I will link my main BNB video in the description below. But the challengers to Ethereum doesn't stop there. One project that has sailed up on my radar is Solana, which is backed by FTX, an impressive company. Solana is doing some things differently, with a different consensus, which also aims to be faster and cheaper. Solana isn't new actually. Without getting too technical, they use the timestamps differently. They have a unique solution, they have good momentum, they have powerful backers. Their total MC is less than 9 billion today compared to Binance 49 billion and Ethereum market cap of 245 billion. Meaning if they somehow succeed, there is a lot of room to grow relative competition. I will leave Solana at that for the time being and come back for an in-depth analysis of Solana later, to make sure to subscribe to that. Next up is actually looping back to BNB. If BNB somehow continues to be relevant, PancakeSwap is undervalued compared to Uniswap. Market cap is 2.9 billion versus Uniswap 12 billion. Trading volume is less and we have to add the V3 and V2 for Uniswap, but the difference is not as big as in market cap. I don't think this exchange is a joke despite their flimsy graphics. I made a dedicated video on PancakeSwap, linked in the description. Next up is something very different, Celsius. I don't only like Celsius because it's named after Anders Celsius, the Swedish scientist with the same first name as I, and because Alex Mashinsky and I share a lot of background, but I do think they built something very valuable in this industry. The yield they offer on everything from Binance to Ethereum to stablecoin is market leading, and I do have high trust in the CEO Mashinsky. He's a long-term guy and he's not going to run away with the money. I think they can go much further, addressing much more of traditional banking services and continue their growth. One of my best videos to date is no doubt my video where I drove to Anders Celsius' old house, which is still there in Uppsala. Definitely watch it. Link in the description. And yes, you guessed it, Haven XHV. They've just been hacked. First time this project almost died was over 2 years ago, when the original developers kind of gave up, but a new team came in, revived the project and continued the work. Now is the second time the project almost died. A guy found an exploit, he used it to mint new coins, the team discovered it, and the community decided to roll back the chains to undo the damage. An extreme action, but one that both Bitcoin and Ethereum have taken in the past. And I think it was the right decision in all those cases. The Haven XHV project has price trackers to the major currencies such as USD, yuan, euro and also gold, silver and Bitcoin. And they can add thousands more. Then you can exchange between those X assets without going on an exchange. So no central exchange, no DEX, no exchange. And the stable coins are not backed by anything, so there is no audit problem like USDT. It's pretty much the same idea as Bitcoin, not being backed by anything except some lines of codes. The X assets are not backed by anything either, because they are not assets, they are just price trackers. Most people don't care if they own the silver nugget or the Tesla stock. They just want to make money if the Tesla share price goes up. They're not planning to vote on the annual meeting. XHV has a privacy layer that Bitcoin is sorely missing, and is really next generation concept in many ways. New concepts and new ideas can fail in so many ways. If successful, this one can be revolutionary for sure. It's also more fun to follow when there is actually innovation, not just fork someone else's project and change 2 parameters. I made a very detailed video about XHV as a concept, I'll link it below. This was half the story. This was the what. But to be successful, that's not enough. You also need the when. Many of these assets are in questionable state in terms of trend right now. That's not necessarily a bad thing. It means you can position yourself and be ready when the buying opportunity confirms. I'm using Lars Online as indicator for trend. You can get access to it along with my process and my free checklist for asset selection on ctolarsson.com. Definitely check it out, it's the best thing I've done in years. If we look at Bitcoin first, it's very clear. We're in a rectangle range. Rectangles more than 50% break in the direction of the most recent move, which was down. That probability would favor a downwards breakout. Also, the Larsson line is blue. If you follow the process, you got an exit of about 44,000. But it's not a given. Rectangles can break both ways and can form a powerful bottom if it turns out that it breaks on the upside. From a TIA perspective, the right way to play this is probably to simply wait for the breakout. If it breaks on the downside, okay, then it's probably going further. If it breaks on the upside, we have a powerful bottom formed. Ethereum to the dollar doesn't look too great. It's actually forming a descending triangle here, which is an unreliable pattern in an uptrend. But things add up, Larsen line is down, descending triangle is forming, doesn't look too great. But actually it's just because Bitcoin is going down. Personally, I don't like analyzing Ethereum on the USD chart anymore because it just reflects the Bitcoin price. I feel that it's more useful to analyze the relative strength between Bitcoin and Ethereum separately. That's what I'm doing here. This is the Ethereum to Bitcoin chart, and here the trend is still up according to my definition, though this one is also forming a descending triangle. I think the right way to play this one is simply to see if the support breaks at 0.055. If it does, okay, then it's probably further downside. If it doesn't, okay, then this might be a powerful bottom here. And same with BNB. I think it's pointless to analyze the BNB to dollar chart because it just reflects what's happening with Bitcoin. I find it more useful to analyze the BNB to BTC chart. This one is a little bit complex here. It is forming some sort of triangle, but personally I just look at the support and resistance. This line here at about 0.01 is now acting as a resistance. For this chart to signal an entry, we will need to cross and hold that support resistance line. The trend, meaning the Larsen line, is definitely up on the Solana to BTC chart. Though it didn't manage to hold this trend line, this one still looks somewhat better than the other charts. On the Solana to USD chart, it's a clear range once again, so you could also just play the breakout on this one. Cake or PancakeSwap is a part of the BNB ecosystem, so I find that one best analyzed actually on the Cake to BNB chart. Because here you see, again, it's a clear range, it's a clear rectangle, and you could just play the breakout here. Celsius to USD is one of the clearer and easiest charts of all here actually. Look here at the clarity of this channel. It's holding this upward sloping channel, and as long as it stays in that channel, it looks really great. XHV to the dollar is very interesting here. After the exploits and the hacks, it had this enormous crash here. And interestingly, even in these extreme events, technical analysis worked. Look here, this line here was the breakout level from this ascending triangle which broke out in January 2021. It had this huge run up and then it crashed down exactly to that support resistance level again, to $80. Went a little bit below, but quickly came back up again. So if this holds, buying at support is always a good risk-reward ratio. If this level breaks, the next level would be $1 and then $0.50. We'll have to wait and see how that plays out. Now, I promised you in the intro to give you something better than just follow what someone else like me talks about on YouTube. Here it comes. Invest in what you understand. Realize that when you are buying or selling, there is someone on the other side. If you are the least knowledgeable person of those two, you're going to consistently lose out, mate. Find some projects where you are the expert. Follow everything about that project. Then add tools to manage the when. If you don't like my process and Larsen line, find somebody else's, but have a process for when to buy and when to sell. Don't rely on social media. Most of them will pump it when they are looking to sell themselves. I have a video of 12 deadly sins of crypto trading. If you don't have a process, you're going to repeat most or all of those, linked below. So instead of taking my list, do like this instead. Number 1, make a list of projects where you are the expert. Number 2, have a process. Number 3, follow it. Now watch some of the videos I linked and see you in the next video. CTO Larsen out, hej då! To sum up, trade what you understand.